Hi everyone, this is Rob Roy of Elliott Options, and welcome to this trade review of our recently closed trade ID number 530. This was on SLV, which is the ETF for the metal silver. You're probably aware that metals have been moving in 2022 and having fundamentals backing us. We're primarily technical traders at Elliott Options, but having a good set of fundamentals behind you is always welcome. This was a long strangle in our volatility strategy, which is comprised of primarily strangles. Now we set up our strangles with the options normally a little further out of the money because we're selecting a delta that has the greatest potential acceleration, meaning the gamma is higher. But in this case, it was a 21 strike put and a 23 strike call, so the two strikes weren't too far apart, meaning that we're going to get the acceleration and the options moving in the money in a relatively short period of time. You see that kind of a setup when you have really low IV, and when we look at the chart, you can see that we had a well-formed symmetrical triangle and a low ADX. That kind of coincides with the low IV. We like a low ADX in our strangles because it tells you the stock has been in a consolidation phase for a while and is likely getting ready to break out. Triangles can break out without a low ADX, but if the ADX is too high, they can also go sideways for a while, which is a problem when you're buying a call and buying a put, as you have the effects of time decay. But silver made a nice breakout, just really moving to the upside from the triangle, and then we got the blow off top, the big gap to the upside. So at this point in time, we're overbought short term. You can see the separation from the 10-day moving average. You have that big gap, and now that IV is injected into the call side with this move to the upside. This was the point in time to go ahead and take the trade off, and you can see we generated over 100% on this nice breakout move to the upside in just 24 days. That's kind of the average time frame for our strangles, 21 to 25 days in that time frame. The normal profit range is 30 to 70%, so this one generated a little better than average, but it was those ancillary issues, low IV, low ADX, nice breakout, gap up, blow off top, added the spike in IV, all those put together gave us a better than 100% return, so a slightly better than normal result. So we really like putting on these strangles when we find these particular patterns. I hope you found that informative, and I look forward to talking to you again next time. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.